The mortgage industry does not have the best reputation. In fact, much of that dissatisfaction is centered around the idea that lenders overpromise. They even bait and switch borrowers where they promise attractive terms up front just to get someone's mortgage business, and then they fail to deliver those terms at the time of closing, changing terms at the last minute when borrowers are desperate to close on that loan. And this can cause serious borrower frustration and even anger at times. So what I want to do in today's video is actually talk about some red flags that you should look for as a first-time home buyer going through the home buying process. When you're talking to a lender going through that pre-approval process, what should you look out for? What should you pay attention to when you're having these conversations so that you don't put yourself in a position where you're angry or frustrated at the time of closing? As a previous lender for over 10 years, I know all of the things that we're going to discuss in today's video. Not because I did them myself, but I was often having to deal with these and have these conversations with borrowers because my competition was doing some of these things. So I thought it would be helpful today to go over these as a previous mortgage expert, if you will, and guide you through that process so you know exactly what to look for when having conversations in the pre-approval process. My goal with these videos has always been about real estate education and guiding you through the process. So do me a favor, if you find any value in my content at all, hit that like button, subscribe to the channel, as well as turn on the bell notifications to be notified anytime I post a video. Now, before we get started, I actually want to talk a little bit about how the pre-approval process starts so that some of the things that I talk about today are actually going to make sense to you. So when you go through the pre-approval process, you're actually going to fill out a loan application. So you're going to have to put your name, your date of birth, your social security number, where you live, where you work, how much money you make, how many kids you have, that sort of thing, along with your spouse's information if they're going to be on the loan or whoever else is going to be on the loan with you. And once you fill out that loan application, you're going to have to provide some documentation. And that documentation typically consists of W-2s if you're a wage earner. If you actually work for someone else, you're going to have to provide those W-2s. You're typically going to provide pay stubs as well. They're going to want to see the last 2 pay stubs. You're going to have to provide some bank statements showing how much money you have in your checking account, how much money you have in your savings account. Maybe you have a 401k, an IRA, some other assets in different places. You're going to provide those documents as well, in addition to providing full tax returns. If you're self-employed, if you have rental property, if you receive any sort of distributions from other companies, that sort of thing, you're going to have to provide your full tax returns. And once a lender has all of this information, they can analyze it. They can tell you exactly how much you can afford to purchase. They can give you quotes on interest rates, because at this point they have likely run your credit as well. So they know your credit scores, they know exactly how much debt you have, and they really have a full picture of who you are on paper. And in turn, that gives them the authority, if you will, to tell you exactly how much money you can afford to borrow when buying a home. But oftentimes you'll have a lender maybe quoting you a rate or giving you a pre-approval letter before ever getting through or doing the information that we just talked about. And that's a red flag. So that's going to start me with the very first thing that you should pay attention to. If you have a lender that's willing to give you a pre-approval letter up front for you to go buy a home, go shopping for a home, without going through the process that we just discussed, where they look at your W-2s, your tax returns, your pay stubs, your money in the bank, maybe they're just going off the conversation that you guys had online, where you were telling them this information, but they never verified it, and then they went ahead and issued you a pre-approval letter to go shopping for a loan. That's a red flag in my opinion. And it's not a red flag because you don't qualify, but it is a red flag because they didn't do the work necessary to determine whether or not you do actually qualify. There's a good chance that all the information you told them is 100% accurate, and they took that at face value and they said, well, that person sounded honest. They told me everything I needed to know. That's good. I'm willing to issue this pre-approval letter. Maybe it's a lack of not wanting to actually do the further work, and they're just being lazy in the process, and they're willing to issue that pre-approval letter. But for you as a first-time homebuyer, this should be a red flag to you, because you have someone that is willing to give you a pre-approval letter up front without doing the necessary work to actually determine that you're qualified to buy that house. And the downside could be that you go out and find a house that you absolutely love, you write an offer on it, you get under contract, and then once you send that lender the information that backs up the conversation you have, they could end up saying, you don't qualify to buy this house because what you told me on the phone is actually different than what I see here on paper. So make sure when you're going through that pre-approval process, you're actually getting pre-approved. A pre-qual is more of the process of having a conversation without providing the necessary documentation. But in order to shop for a house, a pre-qual typically isn't good enough. You need to fully be pre-approved. Therefore, you want to make sure the lender you're working with has verified your information. Now, the second thing I'm going to talk about today actually parlays off what we just talked about. And that's a lender that is willing to quote you an interest rate without actually approving you to buy a home. And what I mean by that is a lot of buyers out there, a lot of borrowers out there want to shop around for loans. And so oftentimes they'll have a conversation with one lender and get a quote for an interest rate, and then they'll call the next lender and say, hey, listen, I don't want to go through the pre-approval process. I just want to find out what your best rate is. And then that lender may turn around and just quote you an interest rate and say, hey, the best interest rate today is 7%. And you may take that at face value and run with it. But the reality is a lender can't actually quote you an accurate interest rate without knowing everything about you. And what I mean is they need to know your credit score, they need to know your debt to income ratio, they need to know how much money you're putting down, and they need to be able to verify that based on the information that you submitted. Now, the one workaround or caveat to this, if you will, is that if you've already gone through the full pre-approval process with a lender, somebody's verified that information, and now you just want to shop around loans, and you can tell that new lender that you're talking to, hey, I've already been through this process. I just want to see what your best interest rate is compared to the interest rate that I got quoted. And you can answer all the questions that that lender might want to know about your credit score and all of the information that the other lender was able to verify. Then I would say in some cases, it's okay just to get that interest rate quote, but just be wary of someone giving you a quote on an interest rate without asking you any detailed information about yourself. And while we're on the topic of interest rates, I would say if you're shopping around for rates, just make sure that you're getting quotes on the same day, typically within a very short period of time, because when you spread interest rate quotes out over an extended period of time, what I mean is if you get a quote today from, say, me as a lender, and then you call somebody 2 or 3 days later, that's not really a good comparison because there's a lot of time. There's, a 3-day gap in that example. You want to make sure it's on the same day, again, within a short period of time, because interest rates move every day. In fact, they move hour by hour, sometimes minute by minute, just depending on what news is actually happening out there. So unless you're getting them in a short period of time, then you're not actually comparing apples to apples when you're shopping around. The third red flag I would tell you to look out for is a lender that's telling you that they cannot lock your interest rate until your loan is approved. That is a full-on myth, if you will, and a lot of times lenders don't want to lock in rates because sometimes they're waiting for interest rates to improve. Maybe they quoted you a lower interest rate than they could actually deliver, and they want to lock the shortest term possible on that rate lock just to make sure they're giving you the best rate that they possibly can. But a lender can actually lock your loan as soon as you go under contract. Your loan does not need to be approved. So just be clear when talking to your lender, if you want to lock your loan, just tell them, hey, I want to lock my loan, as you should not have to wait until the loan is approved to do that. The fourth red flag to look out for when talking to lenders is if a lender tells you not to shop around with other lenders and have your credit pulled with that lender because it will affect your credit and in turn add an inquiry to your credit report, ultimately lowering your credit score. Now, sometimes a lender might be telling you this because that's what they actually believe and they're not actually trying to be deceiving, where in other cases, mortgage lenders might use this argument to keep you from actually shopping around with other lenders by telling you that it's going to affect your credit score. But the reality is you actually have 45 days from the first time your credit was pulled for a mortgage to actually shop around with different lenders and get different quotes without it impacting your credit score. In fact, all of those inquiries within that 45-day period actually count as one inquiry on your credit report. So having your credit pulled by multiple lenders within a 45-day period should not impact your credit score negatively. So anybody telling you that is either one, they're misinformed, or two, they're trying to be deceitful in how they're approaching it and are ultimately trying to keep you from shopping around. And actually, to follow up from that, there's a link to an article below from the CFPB where they actually talk about this exactly, so that if you want information from a trusted source, do me a favor and check that link below. And before we dive into the fifth thing today to look out for, what I would say is if you're out there searching for a lender, you don't have somebody that you know, like, and trust, I've put a link in the description below to refer you to somebody that I know is an expert that will do a good job, that you don't have to worry about taking advantage of you or doing a bait and switch, and you can actually find them by checking the links below as well. And the fifth thing I want to talk about today, the red flag to look for, is probably one of the more common ones in my opinion, and that is a lender offering you significantly better terms than maybe someone else that you've talked to. Now, if you're getting a conventional loan or an FHA loan, a VA loan, or a USDA loan, most lenders that you're talking to out there should be pretty close with regards to interest rate and fees. There may be some minor differences here or there, but you shouldn't see a drastic difference in one interest rate versus another, or the fees being charged at one lender versus another. But oftentimes when I'm talking to clients, they say, hey, listen, I got approved with this guy, but this guy over here is offering me a 0.5% difference in an interest rate. To me, that's a red flag, because I know they're doing a conventional loan. I know they're putting 20% down. I know they have great credit. So I know the terms that they're being offered are going to be good regardless of where they go. But when somebody offers significantly better terms, that to me signals a red flag. Now, if you're doing something like a non-conforming loan or a bank statement loan, something out of the box, if you will, there's an opportunity there for a much larger variance with regards to rate and fees. But for most people out there, getting your typical conventional FHA, VA, USDA loan, the terms should be more or less the same. It's just a matter of picking which lender you trust, which lender communicates well with you, which lender you actually want to work with. So if you are working with a lender and they are promising you something significantly different from another lender that you're getting quotes from, make sure that you get it in writing and understand that nothing is done until that loan is actually locked. So lenders can promise you things all the time, but until they actually lock that loan, just understand the fees, the rates, all of that can change. So just make sure when you're ready to lock that loan, you're doing one final shop around from all the lenders that you've talked to get their best rate and terms before making a final decision. Now, there are several other things that I could mention in this video for you to watch out for, but what I'd like to do is ask you a question. If you've had a lender in the past that you've worked with that has misguided you or done a bait and switch with you, what happened in that scenario? Do me a favor and leave it in the comments below. A lot of viewers read these comments and they're often very helpful for anyone that might be in the same situation. So you providing that information could help someone actually avoid disappointment, anger, and frustration through the home buying process.